Bring in Christopher Rolland, a senior analyst over at Susquehanna International, talk about where expectations were, right, and what's working here.
Sure, yeah. We think there might actually be a little bit of confusion here on the result, just because some analysts have included Symantec, their most recent acquisition that closed in November, and some haven't. And so if you actually include the Symantec for the full year, we actually see it's a little bit light, maybe a little bit lighter than expectations. But besides that dividend and that dividend raise is actually perhaps a little bit better than expected. So maybe that has some long-term investors.
Is this integration friction? What do you think's at work?
It's a little unclear right now. We have very limited information. This often happens when they integrate companies. You see a little bit of friction, to your point. We'll have to wait for more on the call here, but usually things start to settle out, 1 or 2 quarters in on most of these Broadcom acquisitions.
And how about the CA deal? Some say is working out actually a bit better than expected.
CA is working out a bit better than expected. So Hock Tan and his new PE company, publicly traded PE company, is actually working out pretty well as they move from semis into software.
That's what I was going to get at, actually, is how you really should view and categorize this company right now. Should you expect them to continue to kind of roll up these mature tech businesses and kind of diversify away from the core?
Yeah, I absolutely would expect more acquisitions. Hock is somebody who understands scale. So I expect him to do more software acquisitions. And then if you look at, let's say, Symantec, and you look at R&D in the 20% of revenue, the average for Broadcom is 3.5% is SG&A, for example. They can get rid of a ton of cost. So they get all this scale gain, get rid of cost, and that's Hock's game plan.